and gentlemen, my name is Tia Diran, and I will be the host for this session. We are opening today's session with the big theme: technology supervision, now and future. Hard Talk number two: SupTech, RegTech, and Market Conduct Supervision, which will be moderated by the Director of GIKD OJK, Mr. Dino Milano Siregar. Ladies and gentlemen, please give a warm welcome to Mr. Dino Milano Siregar.
Hi, thank you, Mrs. Dina. My name is Dino Milano, and I will be the moderator for this session. From the panel presentations, we are talking about the big theme about technology supervision now and future. Nowadays, there are many issues coming about the supervision technology and regulation of technology and how we manage the market conduct supervisions. So, not to spend any more, I will please Mr. Emmanuel Sigas, lead in regulation and fintech, Cambridge Center for Alternative Finance. Please welcome Mr. Sigas.
To AML compliance. Effectively, what they do is they compile information about a counterparty or a transaction from different sources in order to allocate a risk profile to it and then raise red flags if they need to. And then we have more quantitative applications. So there are, for instance, risk analytics applications. They use big data and advanced analytical statistical tools in order to highlight and prioritize risks within the organizations. We've got market monitoring tools which do the same thing with external data coming in from, let's say, exchanges and trading venues. And perhaps more relevant to regulators, we've got applications that create reports and dashboards, which may not have raised a lot of VC money, but actually a significant amount of the market. Now, what's really important to note before I move on from this table is that very few of the types of applications we consider to be RegTech are completely new to this world. Types of applications such as governance, risk, and compliance, GRC applications, or business process management, BPM applications, or regulatory intelligence applications, all of these fit into this segmentation, and many of them have been around for about 20 years. So it's important to not assume that just because this very effective marketing term of RegTech and SupTech is applied to these things, they are new to market. Many of them have been in industry and in supervisors' toolkits for a long time. Now, I did speak of technology, and I just wanted to spend a tiny bit of time explaining what technologies we're working with here, and particularly to pinpoint the areas where supervisors are putting their time, resources, and money. So the RegTech toolkit in general involves cloud-based applications communicating with each other mostly through APIs. What you can see on this graph is it's very common for things like machine learning and predictive analytics to be engaged. In the SupTech segment of this market, the types of technologies that tend to be overrepresented are data transfer protocols, which stands to reason if you're dealing with reporting for supervisory purposes, natural language processing, which is what an application would use in order to convert free, natural text as written by humans or as spoken by humans into kind of quantifiable insights or categorizations. Deep learning, of course, an application of machine learning, and semantics and graph analysis, which, by the way, has nothing to do with drawing graphs on Excel or on PowerPoint. What we mean here is a particular way of representing regulatory obligations so that they can be made executable. And then what we've also done, my colleagues and I, are what kind of technologies supervisors are prioritizing. And you might not be surprised that at least up until last year, when we surveyed 111 jurisdictions on this, um, distributed ledger technology applications were overrepresented in the RegTech initiatives that supervisors were running in-house relative to how often private sector vendors were using them. Now, I don't want to cast aspersions here, but there was a fair amount of hype around DLT over the last 5 years, and so it's understandable that some regulators have approached this by saying, "Look, there's a cool new technology. What can we do with it?" But usually that's not the right way to proceed. The right way to proceed is to say, "This is what we need to achieve as a regulator. This is what our roadmap is. Now let's see what technologies we need to make that happen." Now, my colleagues and I have spent quite a bit of time interviewing regulators to see what motivates them and what the various considerations are when adopting these types of technologies and solutions. And we tend to think of them as divided between push factors and pull factors. So on the push side, so things forcing regulators to take action, the key thing is the need to get data that is actually actionable, that is useful for decision making at the frequency that regulators want. What we often hear is that the first type of subtech that supervisors experiment with is always around reporting and validation of data coming in from firms. And the reason for that is you may have a ton of data, more than you can ever process, but it takes 2 to 3 months to produce actionable intelligence for your senior management in several jurisdictions that we've spoken to. And if that's the case, then in a crisis such as the one many of us have recently been living through, your data is next to useless. So regulators feel a lot of pain in that area. The other areas that force regulators to think of supervisory technologies is, first of all, many of them have been given remit to supervise more intangible concepts, not financial stability, which to some extent you can reduce to money and quantifications of risk, but things like culture and conduct, which are uh, softer concepts and require that you use different data in order to assess them. And of course, the other thing that we're seeing is that many regulators find that although they're fantastically well equipped to supervise individual firms, most of the risks that they care about, particularly if they're dealing with, if they have a remit to ensure financial stability, most of these risks arise from networks of market participants, either colluding or manipulating the market, often across firms. So you need a very different approach and different technologies in order to identify patterns in how these work together. But then there are also proactive reasons why regulators embrace technology, both in supervision and encouraging firms to embrace technology in their compliance work. I think the first reason, and it goes back to our definition of RegTech, is that regulators generally believe that the RegTech can make firms more effective at managing and owning risks. But the other reason is the regulators, and this is allied to my point about the transition to the digital economy, is that many regulators see a need for creating regulatory utilities that the entire industry can plug into as part of their initiative to support digitalization of the sector. Most of our best examples are around, obviously, eKYC and electronic ID, but there are others as well. Now, I just wanted to spend a little bit more time just explaining what regulators use subtech for, and also just discuss some key trends which I think may come up in the discussion further down the line. Now, I'm drawing on some data very helpfully assembled by the Financial Stability Board in a recent report, and they divide kind of the history of subtech into a pre-2016 period and a post-2016 period, which is apt because 2015-16 was the time when regtech and subtech really became buzzwords, when people such as the FCA started putting them into publications. So it's important to see how people have shifted their focus. And I think what you can take away from this graph is, and I've hinted at this before, is that regulators tend to start with use cases based around highly structured data, reporting and data management use cases, because that's where they can get to the quickest wins. It's important with RegTech and SubTech, at least our research says, to get quick wins because a lot of these programs are long-term and expensive, and you need senior management buy-in by demonstrating that you can do at least two or three focus things very, very well. So in the early days, the use of subtech really focused on use cases that made use of highly structured data and preferably data that the regulators were already collecting. But then, as you move towards the right of this picture, you can see that increasingly the focus is on using technology to analyze instances of misconduct, so identifying instances of misconduct, providing interfaces for regulated firms to talk to the regulator. So I'm thinking of things like chatbots, for example, but also, creating technology tools to match new types of regulatory tools, microprudential tools, for example. The other way to look at how regulators have been approaching this area is to think of regulators as the center of a regtech and subtech ecosystem, and many regulators think of themselves as such. So when we surveyed regulators about a year and a half ago now, they told us that by this summer 2020, about 1 in 6 of them would be running an in-house regtech or a subtech program. And we also heard from firms that about 1 in 5 have at least applied to a regulatory sandbox. So what you can see is that many regulators are intentionally using their RegTech and SubTech initiatives to put themselves on the map as hubs for the creation of a RegTech and SubTech ecosystem. So there's a more strategic consideration behind this. Um, so we're coming now to a bit closer to the end of this presentation. I just wanted to remind you a little bit of these two ways of thinking of machine readable regulation. So regulation as code and regulation as content. Sorry, you can't see both of them at the same time. But if you're thinking of, how do you bridge the gap between what industry is doing on the compliance side and what regulators are doing on the supervisory side, I think it's useful to understand the weaknesses of both of these approaches. So, rewriting regulation as code is fiendishly hard, and outside of a few reporting use cases is even undesirable because regulators want firms to have flexibility and they want firms to take responsibility. And what they also don't want is for poor outcomes when firms just say, "Well, I just executed your code." Um, so there is an investment missing there that I'm not sure we're going to get anytime soon. But when you look at regulation as content, the challenge becomes very different, and their regulators can provide a solution. So if you think about how regulation as content works, it relies on firms and regulators being able to map what types of regulatory obligations exist in the world, and also being able to map the internal environment of a firm, its processes, its controls. And if you do that, then you can use machine learning, for instance, to automate the linkages between the two sides. The problem with that is neither of these sides is standardized. Every regulator has their own sets of obligations. Every firm has its own internal environment. So obviously, one of the areas that are crucial if you want to connect what firms are doing on the compliance side and what regulators are doing on the on the supervisory side is the creation of standards. Now, again, when it comes to reporting, for instance, we're quite good. We, as in regulators and firms, are quite good at converging around standards for representing, facts and figures, but we're less good at converging on standards, especially open standards for representing regulation. There are some great examples which I've listed there, and I won't talk you through each of them. But it remains the case that there are very, very few open shared taxonomies of regulatory obligations, which is the crucial kind of stepping stone. And the final thing that is required to bring the two sides together is overcoming a certain risk aversion on the part of regulators when it comes to engaging with private sector standard setting. So regulators are understandably, because they have obligations and are accountable, are reluctant to be seen to endorse private sector initiatives, particularly if they make profit for somebody. But at the same time, industry cannot convene itself very easily if it doesn't have that stimulus from regulators. So with that, I will conclude my remarks. I'm happy to hear from participants offline. I do apologize that I have to leave you early today, but I thank you all for your time and your attention, and again to our hosts for their gracious hospitality.
Okay. Thank you for CCAS about the presentations. There are so many things that we have to look after these sessions. According to CCAS, the compliancy and the regulatory things from the industrial side and the supervisory side should be looked further, whether to choose the standardized approach or using the more complicated approach using particularly data. From the data that used by CCAS, it looks like the conduct analysis give the largest impact for the regulatory and the supervision technology. Okay, thank you for your presentation, CCAS. We hope that you can give some of the answer, maybe the response from the audience. And let's move forward for our next presentations. I will welcome Mr. Mark Wallace to present in the next presentations. Mark Wallace is a World Bank consultant and specialist on fintech and regtech. We would like to see his opinion about the emergence of regtech and its ability to amplify the voice of the customer. Please welcome Mark Wallace.
Hello, and thank you for the introduction. My name is Mac Wallace, and I'm joining you all today from the World Bank, where I'm a consultant and specialist on SupTech and FinTech. I am a previous market conduct supervisor myself, having been an early employee at the U.S. Consumer Financial Protection Bureau, or CFPB, where I helped to stand up the agency's supervisory and complaint systems. So I approached the subject, having been in, for those regulators on the phone, having been in your shoes from a practitioner's approach. SupTech is recognized by the World Bank as a key tool for financial authorities, and it is an area of increased focus for the World Bank and its technical assistance. Today, my goal is to share some early insights from a forthcoming publication on SupTech for market conduct supervision that will be due out before the end of the year here. So you all are hearing it first today, this afternoon. The paper builds on prior research and work by the World Bank in this area. And the final note, as I mentioned, will be released at the end of the year here. So over the next 15 minutes or so together, what I'd like to do is share 3 insights from the upcoming report. One is on the categories of SupTech for market conduct supervision that we observed. The second is motivations for SupTech adoption by market conduct authorities. And the third is examples and case studies of specific SupTech solutions highlighted in the report. So let's get started. And thank you here for sharing the slides on the screen. As you all are acutely aware, over the last decade, digital finance and fintech in particular has driven major benefits for financial sector customers. While this has driven tremendous overall benefits, it also presents regulators with new challenges related to safeguarding markets with millions of new users, regulating new technology-first entrants into these markets, and of course, the capacity constraints that you all face by supervisors. It can be tempting to step on the brakes to slow these forces, especially in light of these capacity constraints. But the solution is not to limit the development of digital finance, but to ensure that regulators have the tools that they need. And this is why SupTech is so important to consumer finance and to market conduct supervision specifically. And the current health dimension of the pandemic, such as social distancing and stay-at-home orders, has prompted preference for remote means of doing finance. And this expansion of digital activity caused by the pandemic has created new vulnerabilities for consumers, such as fraud and scams, and it also heightens the value of SupTech during these times for regulators to enhance their efficiency. Next slide. About this study specifically, it's a culmination of work with 14 financial authorities that span the globe. Just previewing here, they span both geographies and different levels of market, development. And in our paper, we highlight specifically the challenges and barriers that market conduct supervisors face in low and middle income countries. Next slide. So the first takeaway that I'd like to share with you all is around the categorization of SupTech solutions that we observed in our study across financial authorities. And you know, what Emmanuel and many others have shared within the industry are groupings of SupTech solutions by functionality. And in our paper, we take a look at categorizations of solutions by their primary supervisory activity or purpose. And this list isn't meant to be exhaustive, but rather indicative for you all. And the first one is around regulatory reporting by supervised institutions. And historically, such submissions may have been done manually through reporting templates submitted by mail, email, or fax. And today, web portals, application programming interfaces, APIs, automated data flows, and comprehensive systems allow for this data and data flows to be automated and standardized. And collecting information directly from supervised institutions represents a primary way in which market conduct risks can be identified. The second is around engaging directly with consumers through complaints data. Complaints data represents such a rich source of data for market conduct supervisors, and there have been a lot of enhancements over these last few years in the processing and collection of complaints data. The third is around non-traditional market monitoring. The internet provides new opportunity and options to monitor and conduct market monitoring, which is another crucial activity for market conduct supervisors. Social media, news media, and website monitoring act as a powerful early warning signal to identify emerging customer risks in real time. Especially when these solutions are used in complement to traditional market monitoring, it really provides and helps supervisors see a holistic view of what's going on in the financial marketplace. And then the fourth category here is around document and business analysis. Advances in analytics have been most profound in the realm of unstructured text data. Natural language processing, or NLP, for example, can ingest and analyze large quantities of documents to extract insights in seconds, where previously it would have taken supervisors weeks. And given the more qualitative nature of market conduct supervision specifically, advancements in the analysis of text present a large potential breakthrough moment for market conduct supervision. So these are the four main categories of SUTEC solutions that we observed across the 14 or so financial authorities. And next slide here. What I'd like to share is a little bit around why now and what's different for supervisors as they are implementing solutions across these four categories. And oftentimes financial authorities face a choice between automating business processes and improving hypothesis-driven supervision, or some combination of the two. So we see operational efficiency and enhanced supervisory effectiveness as the primary reasons why supervisors are adopting SUTEC solutions. And if you look at the second row here in terms of what supervisors are particularly interested in, we see that supervisors are interested in improving the accuracy and timeliness of collected information, of enabling, enhancing a risk-based supervision framework, and then also the more efficient use of resources within the agency. And this has second order impacts as it relates to financial services providers and customer outcomes. I think what's new in our research that we found is that given the limited capacity of many financial authorities, many supervisors focus and begin their SUTEC implementation on solutions to improve operational efficiency. The rationale is to make existing departments and staff more productive, and to enable them to focus on higher value activities and analysis to drive market conduct supervision. Overall, what I'll also say is authorities who contributed to this research very much view embedding modern technology and data to the supervisory process as an ongoing effort. And the culmination of these efforts ultimately leads into a organizational transformation into a data-driven supervisor. So SUTEC is really an enabler of that cultural and then also that organizational transformation. Next slide. Across the 14 financial authorities, we identified and cataloged 18 solutions for market conduct supervision. And during this presentation, I'll just briefly touch on and give examples of one solution per category here. For each of these, what I'll also share is, in addition to the solution itself, I'll touch on the supervisory value of the solution, how it works, and some practical considerations for implementation. And even while discussing these solutions, it's important to note that SUTEC is about more than just the solution itself. It's also important to view these solutions in context of the business objectives and other things that the authority is looking to drive. And then it's also important to look at them as in context of the parallel investments in people, process, and IT infrastructure that are often necessary, and we call them key enablers in our research of successful SUTEC implementation. Next slide. So I'll give some case study examples of each of these, just to whet your appetite, so to speak, for the report that will come out later this year. Within regulatory reporting, we've seen a lot of advancements across financial authorities within supervision information systems, or SIS, which are comprehensive systems that collect granular reporting data from supervised institutions. If you're looking at the how it works diagram, a lot of the innovations today have been around the automation and collection of such data. Automated data flows, or ADFs, or other secure transmission mechanisms retrieve and validate that data. And what we see is a centralized data warehouse or sandbox environment that is accessible through permission-based data marts to supervisory staff from across the authority. I think something that is so important around this solution, in particular in context of 2020, is that this type of supervisory infrastructure really supports authorities to conduct offsite examinations, which the logistics of which have been made more complex this year as a result of the pandemic. And in our paper, we highlight case study examples from both the National Bank of Rwanda and from AMF, which is a authority in Canada. Next slide here. The second one is within the second category of complaints collection and processing. We focus on CMS solutions or complaints management systems. And these are in use by authorities around the world. We highlight examples in our paper from the CFPB in the United States, from BSP in the Philippines, and then also the Bank of Lithuania in Europe. Traditional complaint handling often relies on manual processing and can be limited in their ability to interact with consumers. The CFPB reported over the summer, as the pandemic was in full swing, that their volume of complaints has surged by over 50% this year. And that is a trend that we see globally as well. So many regulators are bracing up and facing increasing operational challenges associated with complaint processing. But at the same time, that data is just so valuable and crucial to inform market conduct activities and risk prioritization in a risk-based supervisory framework. So what a complaints management system does is it automates a lot of the complaints handling processes and optimizes the data management of those complaints for supervision. I think a lot of the innovation, in addition to automating the process flow, is really on the front end and how complaints management systems can be designed to interact directly with customers. BSP, for example, launched and has a NLP-enabled chatbot that through feature phones and smartphones are able to engage with customers, and that increases the relevancy of the solution when more people have access to it. And then from there, on the back end, these complaints can be routed to different financial services providers and used to inform supervision. Next slide here. A very common solution under the third category here, non-traditional market monitoring, is social media monitoring. And on a high level, how the solution works is supervisors can use social media monitoring to directly listen to the voice of the customer and understand customers' interactions with financial providers, oftentimes in real time. So this can be a leading indicator as compared to other forms of market monitoring. Practically speaking, how a lot of these solutions work is on the left, you have your data source. So social media and news media are the most common ones. You have an intermediate step in which you have to scrape the data from the website or prepare this data. A lot of authorities outsourced, in particular, the first two steps, although some authorities also develop this in-house. And then through the application of topic modeling and sentiment analysis, that allows for some trend and risk spotting. I think most important to the solution is following the completion of this analysis. It's really key for the insights to be shared across the authority. So in the case of the Central Bank of Ireland, for example, they have a market intelligence working group that observes incoming analysis and changes that they're observing based on social media and news media, which really helps them identify where they need to allocate and spend supervisory time. And overall, what I'll also share is just the increasing commercial availability of these tools have made them more accessible to more financial authorities. And then the last category here, on to the next slide. The last category that we discussed in the paper is around document and business analysis. And there is a wide variety of solutions that use NLP to analyze unstructured text data. And because of the qualitative nature of market conduct supervision, there's been a lot of innovation by financial authorities based on use cases to introduce more efficiency into the market conduct supervision process. And Many of these solutions share a common set of functionality related to being able to upload and review documents in the first step here, and the second step through the calibration of NLP models, such as topic modeling, bag of words, or sentiment scoring, be able to layer intelligence and analysis, and then through reports, dashboards, and analysis, be able to understand what is contained within those documents. And use cases that we've seen across a wide variety of financial authorities out there include analyzing text for regulatory compliance. So having, being able to risk spot where a financial service provider may not be in compliance with a specific regulation. The second is to help analysis with institution examinations. So you're preparing for an on-site examination, and through an information request, you receive a large package of documents. You're able to go through those documents faster. The third is analysis for peer group comparison. So again, you're conducting on-site examinations, not only for one institution, but let's say a basket of institutions in a product area, and you're able to, across a team of people, identify common themes or emerging risks across a basket or a peer group. The next example that we've seen is validation of product terms and conditions. So with a high velocity of new products being introduced in the market or changes in products, you can actually identify potential adverse changes in terms and conditions to customers using NLP enabled tools. And there are applications of this in licensing, in reviewing new provider registrations, and then also in the review of financial statements that are submitted by financial institutions. And then next slide here. More than just the SupTech solutions themselves, which our paper discusses 18, and I shared on a high level here the 4 categories, and then an example of a solution per category. Implementation is about more than just the SupTech solution itself, we discovered. And this was a common refrain from the 14 financial authorities that we collaborated with. It also takes parallel investments in people, process, and underlying technology. Under people, it's really key to have a culture and have the appropriate skill sets in-house to support technology solutions. For processes, it's really important to have internal champions and governance, both of the solutions, but then also the output of the solutions, so they're used most effectively for market conduct supervision. And then third, in terms of technology, having a strong underlying IT infrastructure can help accelerate SupTech adoption here, and make the solution more resilient as a roadmap is put together going forward. And with that, last slide here. And with that, I'd like to thank our hosts, and I'm happy to continue the conversation with anyone more interested in this topic. As I mentioned at the beginning, this paper is forthcoming in the next few weeks, so more to come. Thank you.
Okay, thank you, Michael. It's an interesting presentation, and then we hope that we can wait until the new few coming weeks for the new information for us. And if we still have time, I think we are going to proceed furthermore. Before having the other sessions of questions and answers. Okay, for your presentations, Mac, I think that the key enablers of the supervision technology implementations, I agree with you, the people, process, and the IT infrastructures. That's the key point. And then there are some the area that we need to discuss furthermore according to our regulatory in Indonesia, and then the cross-cutting issue between the regulators will take these processes. Okay, thank you, Macvelis. I will, for the next sessions, I think I will please Mr. Brooke Peterson, the program officer, financial services for the poor at the Bill and Melinda Gates Foundations. Please welcome Brooke Peterson.
Great, thank you so much. And thank you to OJK, BI, AFTEC, and AFSI for hosting this event. I was fortunate enough to be able to attend the inaugural event last year in Jakarta, and I'm disappointed that we all can't come together again in person this year, but know that this event will be successful and look forward to hopefully being back in Jakarta for the next FinTech Summit in 2021. I also want to thank you for the panelists. I thank the panelists who preceded me, Emmanuel and Mac. I think they've done a wonderful job of setting the stage and helping us understand what RegTech and SupTech are, what are some of the applications of RegTech and SupTech, and what are some of the requirements in establishing it, not just the technology itself, but some of the people, policy, and underlying technical solutions that we need to think about as we deploy them. I'm going to take a little bit different tack in my presentation. I'm not going to be talking about specific RegTech or SupTech solutions too much, but really more about some of the benefits that we can realize in deploying RegTech and SupTech. And because of the focus of the foundation, it's really going to be on how RegTech and SupTech can relate to financial inclusion. And so how we think about regulatory and supervisory innovations as enabler of broader access to financial services, particularly by poor and vulnerable populations. Next slide, please. And so when we think about financial services for the poor, which is the team that I work with within the foundation, is we really are about trying to create, drive access to financial services by the greatest number of people. And so if you look at Indonesia, there's been rapid growth in financial account ownership, going from 31.3% in 2014 to 55.7% in 2018. And 2020 data is being collected now and should be known in early next year. And I expect that we'll see a further leap in account ownership. But even if we do see growth, there's still clearly going to be quite a few people left out. As of 2018, over 90 million adult Indonesians did not have access to a formal financial account. And even if we see some reduction in that number, there's still going to be tens of millions of Indonesians who are waiting to be allowed into the formal financial services ecosystem. Next slide. And so, but why financial inclusion? So having an access to account is not in itself terribly useful, but it's what you can do with that account. And so what we see is that folks who do have access to financial services, particularly payment services, are better able to weather financial shocks and take advantage of income generating opportunities. And more importantly, it's really a link to the broader economy. And if you think about Indonesia with the rapid growth of digital platforms, one of the prerequisites of being able to access services or goods or to participate in the platform as a provider of services is you really need to have a financial services account. And so these platforms are driving use cases and increasing adoption, but also there's a risk of people being left behind if they aren't able to access financial accounts. And so we really see financial inclusion and financial service provision as a key link to the broader economy. Next slide, please. And so as the Gates Foundation, when we think about how we support financial inclusion, we look at three broad areas. One is the policy and regulatory environment. Is the environment conducive of financial services expansion, and particularly to poor and low-income users? Is the digital financial infrastructure in place? And so when we talk about infrastructure, in this case, it's obviously not roads and ports, or even electricity, that's obviously important, but it's more about financial infrastructure such as payment switches. So you think about the National Payments Gateway or the forthcoming BI Fast that Bank Indonesia will be deploying early next year, as key enablers of low-cost interoperable payments that allow people to connect to financial services more effectively. And also another a core piece of infrastructure is identity infrastructure, so the digital identity in particular. And so you have the eKTP in Indonesia, and you also have sort of what is currently the global standard of Aadhaar in India, as being a key part of an overall financial services ecosystem. And this is obviously all with the goal of driving actual usage by folks. And so we also think about tools that we can use to make sure that people not only have access to financial services, but have reason to use them. Next slide, please. And so as we think about sort of the key ingredients of financial inclusion, and you have them here, is we have access, which is the obvious sort of physical access. Can I get to a point of service? But also there are other aspects of access. Operational access is the service available when I need it to be at the right time. Cultural inhibitors to access, whether gender or class-based restrictions that limit mobility, or other reasons why people wouldn't be able to enter a facility or leave their home. Safety restrictions, that make it less safe for someone to leave their home or access a financial services location. And then there's technical access restrictions around digital infrastructure, phone ownership, or data access, that all combine to facilitate access. And then if we think about utility, and so utility is the usefulness of a product. So obviously, if we don't value or get benefit from using a financial services product, we won't do it. And so products really need to be designed in such a way that it creates value for the user. And then the last two is we have cost, and cost is simply the ability to afford a financial service, and so that's fees plus access cost. And so it's not just the sort of the actual transaction fee or other fee that you incur, but also the cost of actually getting to a service location, or perhaps maintaining data on your phone, for example, if you're using a digital product. And this is just, I should note that this is all from the consumer standpoint. And as we get to subsequent slides, we'll be talking about it from the provider and supervisor standpoint as well. And the last piece here is trust. And so it's confidence in the service and confidence in the consumer's ability to use that service. And so if you have all these four pieces in place, then you get to that point where people will use financial services and facilitate broader access to financial services and realize the benefits that can accrue. Next slide, please. So how does this all relate to RegTech and SUTEC, you're wondering? So looking at two of these big components, cost and trust. And this is where, as a foundation, we see RegTech and SUTEC playing the greatest role. And so focusing first on the cost standpoint. So Emmanuel, I think, provided an interesting point, which was in his presentation, is that 4% of revenue for large financial providers is going to compliance. And so when you're talking about low margin products in financial services, and this is particularly true as we think of payment services and products, or trying to reach long tail consumers, is the margins are quite low. And so if you're actually having to spend 4% of your revenue on compliance, that dramatically reduces the number of people you can serve profitably. And so we think about how can we reduce the cost of compliance? How can we reduce and automate labor-intensive tasks? Or how can we even specialize and outsource some compliance functions, whether that's cloud-based data analytics or even compliance as a service from a third-party provider, in order to drive down the cost of providing services. And so again, this is from the provider side in terms of reducing costs, but of course, obviously it has implications in terms of how they can price the product so that you can reach more consumers. And the lower the cost of the product, the more likely that someone is going to be able to use it and realize benefit from it. And this is obviously very important to us at the foundation as we think about how you reach low-income consumers who have less money to spare. And I think one of the best examples of a RegTech solution that can facilitate financial access is eKYC. Now, as Emmanuel and Mac have both noted, is that RegTech solutions have been in the marketplace for some years now, and this is true of eKYC as well. And yet, it's still not fully implemented in many countries, including in Indonesia. And so we see, if you think about the cost of onboarding a customer, sort of the initial cost that a provider has to incur, so they're already starting in a hole with every new customer they bring in, and they have to make money back in order to realize value from the consumer, just as the consumer has to realize value from the product. And so SNKI recently, with the help of MSC, looked at the cost of eKYC across a range of institutions and found that for e-money providers such as OVO and Dana, Linkaja, or GoPay, the cost of onboarding a consumer can be as high as 115,000 rupiah, or $7.80, and take up to 2 days. And that's obviously quite a bit of money when you think about the low margins that they realize on a lot of consumer transactions. And so being able to make back 115,000 rupiah from consumer may mean they may not realize value from a consumer for quite a bit of time, and it may be that consumer falls out, falls off the service before they are able to recognize the return. Banks have a slightly lower cost of onboarding, but even they see onboarding costs as high as $4. But notably, their time to onboard is much longer. And so it can take up to 2 weeks to open a basic savings account. And when you think about onboarding social G2P beneficiaries, such as beneficiaries of PKH or Kartu Sembako, that process can take up to 3 months. And so when you think about eKYC, it can really drive down the cost of onboarding to maybe even only a few hundred rupiah, but also dramatically reduce the time it takes to onboard someone. So this is both the benefit to the consumer and the benefit to the provider. And so that's an example that we often talk about in the RegTech space. Now, turning to trust, and this is a big piece of getting people to be comfortable with how you use a service. And so trust is obviously very complex. It includes areas that I'm not going to talk about today of financial literacy, consumer capability, digital literacy, other aspects that make a consumer comfortable with and trusting of a product. But this is more about how can supervisors in the broader environment generate trust through the use of RegTech and SUPEC solutions. Both Emmanuel and Mac talked about the benefit to consumer protection, to complaint handling, and then improved market insights. And all of these, these 3 areas are ways that you can make the service environment, or the financial services environment, better for the consumer, and engender trust and confidence in using a product, and make it more likely that they will enter the financial services ecosystem. There's also the improved quality of service at the point of engagement. And so you think about an example would be agent networks. And so you have Laku Pandai agents, over 1 million of them now in Indonesia, as well as a growing range of fintech agents, or LKD agents. And having insight as a provider down to the agent level in terms of looking at transaction volumes and values, looking at liquidity and cash positions or float positions, allow you to better manage the quality of your product and service, and make sure that consumers are getting what they want and need out of the service provider at the agent level. And so there's been a lot of work done in other markets in terms of creating technical solutions that allow visibility at that level, that can also be used to support compliance and reporting functions around the state of your service related to transaction flows. And this is obviously fits into another area of concern for supervisors, AML and CFT, though this is just one aspect of that. Next slide, please. And so I was glad that Mac, at the end of his presentation, talked about how COVID has brought to light some of the challenges that and risks that are present in the financial services space. and where RegTech and SUTEC solutions might come to bear in terms of addressing some aspects of these risks. And so you have a list of 7 risks here, and these were compiled by a group of international organizations that were looking at the economic response to COVID-19. And so quite a few jurisdictions moved aggressively to expand social payments to transfer funds digitally to their citizens to protect them from the economic fallout of COVID-19. And Indonesia is notable in this case in that they moved very quickly with a generous package of social safety net payments to both existing and new beneficiaries. And so this includes, as I mentioned already, PKH and Kartu Sembako, but also the new Kartu Prakerja program, as well as an increase in distributions to village funds and others that collectively represent a huge transfer of funds to both new and existing people. But what we saw in that was one, a tremendous benefit in terms of poverty alleviation, or the sort of the worst downside impacts in terms of poverty from COVID, where there was early projections of increasing poverty levels by millions of Indonesians, and that's largely not played out in large part because of the social benefits that have gone out. But this rapid expansion has also stressed the system in Indonesia and in other markets, and so what we see are highlighted in red here out of these 7 are examples where RegTech and SUTEC solutions might be able to play a role. And so as we move into, I should emphasize that all these payments are being made digitally. And so they are part of this new data-rich environment in which we live and in which supervisors exist, where they can really take advantage of the data flows that are there to improve overall financial services or financial ecosystem performance and address some of the risks. And so if you look first at 1, 4, and 6, inadequate complaints and feedback mechanisms, high transaction failure rates, and overcharging of fees for cash out and transactions. This is really about creating feedback mechanisms using technical solutions ideally. And some of the solutions that could apply here, Mac referred to in sort of real language processing, natural language processing, scraping of social media data and other forms to have insights into some of the failures in the system, whether those are failures of sort of honest operational failures or actual misconduct, either at the service level or at the institution level, and creating solutions that allow supervisors to better address them. The other one here is the number 3, which is the exclusion of current and potential beneficiaries. And I already talked about the value of digital identity and eKYC, and that really comes into play here in terms of moving quickly to onboard consumers, because if the current process takes 3 months to onboard new GDP beneficiaries, you're obviously missing a prime window where people who are badly affected by an economic crisis aren't able to access government benefits because they're waiting to be onboarded. The government of Indonesia has done well to try to shorten this time frame through improved and streamlined processes, but it's still not a digital process where you could see both reduce costs but dramatically reduce time frames to onboard new beneficiaries, and also to improve targeting so that you're able to understand more clearly who the individual is, what programs they're enrolled in, how they're benefiting from government payments, and then how you might expand services to an individual beneficiary or to others in their community who are not currently participating. And so I'm gonna stop there, but I just wanted to say that I conclude by saying RegTech and SUTEC is one area where we see positive social impact and social benefit coming out of it, as well as obviously broader market benefits and to consumers and providers of all stripes, whether sort of low cost or established or new innovative providers. But it's certainly something we look forward to seeing in Indonesia from OJK, who I know has been very forward-leaning on trying to deploy RegTech and SUPTEC solutions and looking at ways to incorporate them into the sandbox. And so I look forward to learning more about the innovations taking place in Indonesia going forward. Thank you very much.
Okay, thank you very much, Brooke Peterson. Interesting speech about it, and then, but I think we need to catch up our times. Let me introduce Mr. Enrico Haryantono from the head of Integrated Financial Services Sector Policy Group from OJK. Please welcome Mr. Enrico Haryantono.
Thank you, Dino. Okay, my name is Enrico, and I think I will try to be quick because we already late when we start this session. And as we already have so many insight about SUPTEC, RegTech, and also market conduct from previous speakers, let's start the screen now. And also, I believe some other speakers, maybe Brooke already missing big part of his sleeping time, so I try to be quick. I have 6 slides here. Let's start with this first slide. Okay, I think I will jump to our situation or our mandate in the OJK as an Indonesian FSA authority, that we have a market conduct supervision and prudential supervision in one institution, one big institution, which is OJK. So we have a challenge to balance this two big mandate, which maybe in some other part of or other jurisdiction is separated in different institutions. So in OJK, we have regarding the market conduct, let's leave the SUPTEC and RegTech a while. I start with our OJK regulation number 1 is already 7 years back on market conduct, which is defined as the financial institution behavior, FI behavior in designing, organizing, and delivering information, offers, make an agreement on the financial products and services, as well as dispute resolution and complaints handling. So this kind of market conduct supervision is one of our mandates. So we are aiming to capable of protecting the interest of consumer and the society. So I think this is a very important standpoint, side by side with our prudential supervision. Next slide. So I think we already have seen or exploring this from the previous speakers that we have a driving factor to implement SUPTEC and RegTech, as you know that the number of transactions is involved in our growing financial industry is skyrocketing, and also the technology. But of course, we are trying to keep the efficiency of the supervision itself. So we can see that the number of the supervision remains stagnant. And also, unfortunately, we also have this already challenges, maybe also already mentioned by previous speaker. We have the cost to implement SUPTEC and RegTech, which is quite expensive. Also, the misinformation about SUPTEC and RegTech concept or framework. Also, data security and governance must become main concern. Also, maybe lack of regulation in some part or other part of this evolving industry. And also the poor data quality can be an obstacle because SUPTEC and RegTech is quite heavily rely on data. And of course, we are also increasingly depend on the system because we try to smoothing and also simplifying our supervision business process. So it's very critical to the continuity of business process in supervision, in market conduct as well in prudential supervision. So the system failure is also some of the risks that really needs to be considered. Next slide. So if we can see a glance of our supervision today, OJK has some program that has been implemented. I think this kind of program is actually will support the implementation of SupTech and RegTech in the time ahead. But if we see that the current supervision activities we have already, we have in banking, capital market, and NBFI. We have sectoral supervision, and we also have the integrated supervision, which oversee the financial conglomerates, including also the AML supervision. Those monitoring process is assisted using tools such as audit common language, data warehouse. Also, we utilizing Bloomberg and big data, but still this process depends on human interaction. We can see the manual process. We also have the electronic licensing. Now we have the so-called integrated single submission licensing system called SPRINT to accommodate a licensing process submitted by the FIs. This system also have been integrated with the other institution, which is our stock exchange. And also we have developed various reporting systems to capture data from FIs. Regular or irregular basis reporting system we have on board. Also, we have executive dashboard for surveillance already used by our board members. We also have a credit information system or SLIC and other sectoral reporting tools. And also finally, regarding to the market conduct, OJK already developed system to monitor kind of advertisement issued by FI and also self-assessment tools for FIs to report their consumer education and protection implementation. But also the analytical process still heavily rely on human interaction, as we also here witnessing financial institution which financially strong, but maybe in some part of their conduct on selling their product or services, they still have some issues in market conduct area. Next slide, please. So at the last part of my presentation, I want to present some recommendation by RegTech Lab, of course, supported by and assisted by the Gates Foundation here, which is now we are in OJK, we have decided to put the 10 priority or our program for the path ahead in RegTech and SupTech. So we have 5 each. We have 5 initiatives in the RegTech. First one is the eKYC, while Indonesia has initiated a comprehensive national strategy to utilize national IDs to support the expansion of the digital economy by using government databases for bank accounts opening. So in order to implement the strategy, OJK Toolkit is needed. We have a piloting in practice. Indonesia has begun testing the use of the database in our Dukcapil, which is a part of our home office ministry dealing with the data of citizen in Indonesia. And we moving forward to integrate it in process of bank accounts opening. And also the sandbox test, we as a eKYC provider could use the OJK sandbox to test this is another additional new implementation. The second is e-regulatory compliance. As we are all aware that digital technologies and automation can be used to streamline and simplify regulatory compliance. So that in order to implement OJK's toolkit, fintech and associations such as SRO could develop notification rules as a service for members. Let's say like a mapping of regulatory requirements for companies' policies and procedures based on product type, customer base, and geography. The third one is the fraud detection. We have 3 main concerns in this area. First one is company often combine their fraud detection processes with their KYC procedures on the front end and using AML controls for transaction monitoring. In regulator side, OJK could make datasets available to RegTech solution providers for model development and or testing purposes. If we does not have the required transaction data, the data could be collected from regulated institution, anonymized, and it can be provided to private sector developer who develop anti-fraud tools. The fourth one is the e-risk management. The key point in e-risk management is the ability to access relevant risk and compliance data, so the data can be compared and analyzed with risk management. OJK could initiate open discussion to identify obstacles faced by industry. This shows our commitment to support the use of more advanced analytics to the risk management. And the last one in the 5 initiative in the RegTech area is the application of the API or application programming interface, which is one common ways to transmit the data. However, APIs require some large companies to be operated. Currently, identical APIs present technical and coordination challenge, but we are working on it quite extensively. Let's move to the SupTech area. We also have 4 initiatives here. First one is the data analytics. The first question in designing an operating model for a regulatory data analytic function is whether the data analytics should be centralized or decentralized. One example of this, maybe we can see in the UK with FCA, have a centralized data repository accessible to anyone within the FCA. So OJK also consider on creating a similar centralized data repository as one of the key concerns. But also we have a issue on the difficulty or on sharing data across division, which will hopefully will be one of the solutions if we can go through this path with data analytics. The second one is the text report mining, which so far by the assistant of RegTech Lab, they have recommend us to use the NLP. I think already discussed in the previous speaker, natural language processing technology with a wide range of potential application for text analysis in supervisory processes. This NLP, of course, can be used to transform free or unstructured text into normalized structured data, which will be suitable for analysis. And we believe that NLP can also be used for document classification, keyword and key phrase identification, topic extraction, etc. Next one is the customer support technology. In terms of customer of this initiative, we develop a consumer complaint tool, such a chatbot, which will likely to require an external vendor. Also, but combining external data sources, if they can be done efficiently in an automated way, it will carry great promise to expand OJK's reach and increase its effectiveness without a linear increase in our resources. And then blockchain licensing, e-licensing, the key objective is to streamline the licensing process and provide transparency to company or financial institution in the licensing process about the status or the application. And also the e-reporting, I think this will also go as well. The last slide, the possible implementation of SupTech, especially for market conduct supervision, OJK has already a legal basis that requires us to implement an effective complaint handling and dispute resolution, which already stipulated in Article 2 of our OJK number 1, OJK regulation number 1, which I mentioned before, regarding the consumer protection in financial sector. So to achieve that, we must update the technology and using latest available technology in the market. This is really important because consumer complaints can be used as a source for market conduct supervision, input for policy regulation, or can be published as a data transparency to the public. As we also look some financial institution here, they are facing the unwanted reputational risk and also legal risk when they facing the risk coming out from the market conduct of their operation. So there have been many examples of SupTech implementation for complaint handling system in other authority. Maybe we can see what BSP in Philippines do, also the CFPB in US, also the FCA, how they can have a system complaint handling in their web-based system, and also how the FCA utilize screen scraping and NLP to identify risks based on digital activities such as social media, which is some avenue we can look at and going forward to explore that. So by learning from other authority how SupTech implemented for market conduct supervision to enhancing complaint handling system in the future, there are some possible implementation for us in OJK to have our complaint handling system, like use of chatbot extensively, also utilize the automated complaint processing using machine learning, and also using the dashboard for tracking key metrics and trend. I think I stop there and back to you, Dino. Thank you.
Thank you, Mr. Enrico Haryanto. Ladies and gentlemen, we have come to the end of the sessions since we have a very limited time now. Though these crucial sessions, through these crucial sessions, we can come to the conclusions that RegTech and SupTech are things that can help regulator as well as the industry in supervision and compliance, which led to effective, efficient, affordable options. There are a lot of work to do, but we have to face it and then go furthermore. We highly appreciate for all of the panelists, Mr. Emmanuel Sikas, Mr. Scott McWellis, Mr. Brooke Peterson, and Mr. Enrico Haryanto as our panelists for today. And this is one part of the big theme, technology supervisory now and future for Indonesia FinTech Summit 2020. And then I thank you for all the panelists. We hope that we are getting to our new bright future for Indonesia economic. I think that's all of our panelists' presentations. Thank you very much. Ciao.